What's up everyone, it's Kadi with MoneyVest. So in this video, I wanted to go over a report where a lot of experts, a lot of analysts, a lot of economists kind of come together and they're basically suggesting that this August weakness and the sell-off is a buying opportunity for investors, which I do somewhat both agree and disagree with. So I'm going to share my perspective. I'm going to go over some of the reasons as to why they're saying this. And we're also going to break down the technical, the market setup, and what my expectations are moving forward. I'll give you guys a little bit of a prediction for next week as well at the end of the video. So of course, if you do watch till all the way to the end, I'm going to slip it in at some point towards the end of the video. So hope you guys enjoy it, find it helpful. Make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining. And of course, don't forget 16% annual discount available till the end of this month. So there's 4 or 5 more days left. I did open up a few more spots. If you're interested in joining, of course, getting access to all the alerts, all the members only private videos, intrinsic value spreadsheets, all the benefits are going to be included with the link down below. So we'd love to have you on board. So this right here is the report. By the way, before we get there, I have a brand new channel that I wanted to once again reintroduce you guys. MoneyVest Europe. We are all in on this channel. I'm posting videos every single day, and there are very, very strong companies. I'm not kidding. All right, there's a lot of companies in Europe that are worth looking into, especially the one that I just analyzed 7 hours ago. So this video right here, this is one of the highest quality stocks, not just in Europe, but perhaps even competes well with a lot of US companies as well. So it's very well run, high margins, high profitability, very, very strong growth. So you definitely want to check that out. It is a Swedish stock. So that's, again, if you're interested in European markets, if you're interested in getting a good understanding of stocks outside North America, especially in Europe, in a lot of these different countries, which do have a lot of potential, definitely check out this new channel called MoneyVest Europe. It's another branch of our MoneyVest community. So we'd love to have you on board over there as well, and make sure that you do subscribe. So 4 reasons to start buying the August stock market weakness and what to buy. So the first reason that they are suggesting that this August weakness and the sell-off is a buying opportunity, and especially Ed Yardeni is the one basically behind this research report, is no recession ahead. They say the rise in the 10-year bond yield reflects an increasing worries about inflation and economic growth that just won't quit. The concern is the Federal Reserve will have to hike interest rates even more, sparking a recession. However, these worries are unfounded, and inflation is actually pretty tame by now. And Yardeni points out that excluding rising rents, the consumer price index and the core CPI are 2.5% respectively. And he says, and I quote, "What am I missing exactly? The rents. Duh." I mean, this is such an interesting way of looking data. It's like saying S&P 500 is undervalued if you don't account for the top 50 overvalued stocks. Like, yeah, no shit. I mean, if you just completely change the data, yes, it's gonna seem something completely different. So I don't fully agree with this idea that, oh, inflation's already down to 2% if you don't include for rent. Well, then it's not inflation. You got to account for everything. You got to look at all the data points, what makes all these data points, everything that's inside the consumer price index, the basket of goods and services is what makes the consumer price index. If you take out food, if you take out rent, it's no longer a consumer price index. It's a completely different index, right? So that is something that is always interesting. Like, I don't agree with this, that inflation is already down to 2.5%. I mean, I have already mentioned that I'm very much on the camp of Ray Dalio, where I do believe there's going to be some stagflation. Inflation is going to be a little bit more persistent and more sticky. Eventually, yes, it could come down to 2.5%, maybe even sub 2%, closer to the Fed's target. But to say that we're already there, I just don't buy it. So that's number one reason I'm not agreeing with that. But the consumer is strong. Their spending is supported by continued jobs and wage gains. Retail sales surged in July, beating forecasts, and consumption remains very resilient, says Bank of America economist Michael Gappin. So that I do agree with, because retail sales have been coming in very strong. However, there's a caveat to that. There is strong consumer spending and retail spending. Why? Because there's a lot of debt. Credit card debt's over $1 trillion. We know personal loans are hitting an all-time high. Delinquency rates are only creeping up now. So the only reason why consumers are strong is because of the debt that they're taking on. It's not because they're in a better shape, better financial position. Sure, they were. When the COVID was happening, there was a lot of fiscal stimulus pumped into the economy, but those savings are depleting at the moment. And of course, we are tapping into a lot of credit and a lot of debt in order to basically make it seem like the consumers are strong. Concerns about a decline in excess savings seem overblown. So the baby boomers have $75 trillion in net worth, says Yardeni, and they are retiring and spending it. When they are not playing golf, they are going out to restaurants, traveling, and buying Taylor Swift tickets for their granddaughters. They are spending money. So That I would say is a fair concern, that baby boomers, yes, they do have a lot of spending power, a lot of money available sitting on the sidelines, and they are basically retired and spending all that cash that's sitting on the sideline. However, it's not about the baby boomers. Baby boomers don't make up majority of the population. It's really just the middle, basically millennials and the Gen Zs are the ones that are up and coming. Spending from those types of demographics is really what's going to drive the economy. Yes, baby boomers have a lot of excess cash, but they also don't represent, of course, majority of that population. So yes, they have cash right now. 75 trillion is a pretty substantial amount and they're spending it, but over the next 10 years, 15 years, and maybe even the next few years is what it's really going to come down to, is millennials, Gen Zs. They're the ones that need to save and of course eventually spend in the economy if we are going to keep going. Fiscal stimulus remains robust. It's coming from recent laws like Inflation Reduction Act and the CHIPS and Science Act. There's so much fiscal stimulus offsetting monetary tightness. We haven't had a recession. We have never had so much fiscal stimulus before recession even occurred. At 9% GDP, 9% of GDP, the U.S. federal budget deficit is the biggest ever outside of wartime, notes Bank of America. And that's not something that I think we should be proud of, right? I mean, 9% of GDP is the U.S. federal deficit. Federal budget deficit is the biggest ever outside of a wartime, right? And that's seen as a positive catalyst. Like it's crazy, right? That's seen as a positive catalyst. And this right here is something that I fully agree with. Like, this is something I'm on board. Is the technical analysis, the upward trend is your friend, and the trend right now is still very much to the upside. To have a 5% pullback is not unreasonable. Something that I've mentioned time and time again. This literally is word for word. Something that I've mentioned is not unreasonable for us to believe that, okay, a 5% pullback or a 6% pullback is not reasonable, right? It's very much on the table, something that we can expect. Insiders turning more bullish, but not there yet. So I follow insider buying on a daily basis to get insights on company sectors and market overall. Lately, I've noticed an increase in interesting insider buys, meaning large purchases or buys by insiders with good records. And composite numbers tell us the same story. So apparently there are a lot of insiders also buying, and sentiment is cautious enough to signal a buy. And overall sentiment, I would say that it is, a little bit more on the I would say bearish side. So sentiment has fallen a lot in August because of August seasonality. We have seen sentiment come down, and it's cautious enough to support the case for buying stocks. If you just see one indicator, make it the investor intelligent bull bear ratio, and this tracks the sentiment of investor advisors on a scale of 0 to 5. By how I use this gauge, investors should turn bullish when this indicator falls below 2, because that just goes to show that a lot of investors are bearish, and the bull bear ratio fell to 2.36 from 3.07 2 weeks before. And of course, that's close enough to signal a buy signal, right? Because it's a contrarian indicator. If most people are bearish and they're cautious about buying, that's when you really go start buying, right? That's when you get a lot of deals. So those are some of the reasons. I mean, going back, like, I don't agree. Recession ahead and inflation coming down, I don't agree with this one. Consumer is strong, but on the back of, a lot of credit. Yes, baby boomers are representing a lot of significant buying power, and they are spending. So that's one of the reasons why we are seeing the economic growth to be very, very strong. Fiscal stimulus remains robust. That's not something to be proud of, in my opinion. Technical trend is very much to the upside, and we do have insiders. Apparently, this is not something I'm confirmed with, but they are buying, and sentiment is starting to turn a little bit more bearish. Now, going over to the market. So last week, we were up 67 basis points. I did mention that I wouldn't be surprised if we do see a little bit of that momentum for the market, and of course closed last week green after having 3 to 4 weeks of consistent red. So if you come over to the weekly chart, we were actually up 82 basis points on the last week here after having 3 consistent weeks of red. So going into this upcoming week, I do expect us to maybe retrace back up to 44.46, 44.50, potentially get up to this red rectangle, or red circle, I should say, red circle, back up to that resistance, and then eventually get rejected. So I actually wouldn't be surprised if we close flat. I wouldn't be surprised if you have actually a flat week going into next week. If you do see some momentum coming in, buyers stepping in to get us to 44.50, and then get rejected to basically come back down, because I do believe that there is a head and shoulders pattern fully forming right now with the left shoulder, head, and right shoulder that is perfectly shaping up with the support sitting roughly inside this green rectangle at 43.30, 4300. So if you do end up seeing a pullback and a breakdown below the support, I would not be surprised one bit for us to trace down to 4200 or even as low as 4150 in September. Again, September is the worst month of the year for the markets from a seasonality perspective. So I wouldn't be surprised if September is somewhat equivalent or even worse month for the market compared to August. And same thing with the NASDAQ. I wouldn't be surprised if we start off strong on the back of maybe a couple earnings and a couple different reports, economic reports. If we push higher, maybe get up to as high as 13,800, and then of course start selling right back down, kind of filling in this right shoulder inside this head and shoulders. So let me know your thoughts down in the comment section below. My prediction, again, I'm not one for making prediction, guys. So again, like I said, I don't like making predictions, but just for you, just for shits and giggles. Again, I do apologize my words here, but just for fun. Flat week, a little bit of that momentum earlier in the week, and then maybe a potential sell-off towards the end of the week. Wouldn't be surprised for us to fill inside this right shoulder as we kind of form this head and shoulders overall. So let me know your thoughts down in the comment section below. What do you think about the markets? As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. And also, we do have a MoneyVest Europe channel, and you can check out European stocks and analysis on indices, on European indices on that channel as well. 16% annual discount available till the end of this month. As always, happy investing. I'll see you all in the next video.